If you understood bullish momentum burst, you will find understanding bearish momentum burst is relatively easy, because the same phenomena where stocks make 8 to 20% move, or if they are lower price, 8 to 40% move in a manner of 3 to 5 days, also happens on the bearish side. The only difference is that on the bearish side, in any given year, you're going to get less number of bearish setup because the market has a continuous upward bias. So, in terms of opportunities, the number of opportunities which you'll find on a momentum burst bearish may be around 800 to 1000 in most years. If there is a bearish market, longer duration bearish market lasting around a year or year and a half, then you might get equal number of bearish momentum burst as you get in bullish momentum burst, which is thousands. So in terms of the structure of this move, it is no different than what you see in the long side. There's a breakdown, that's a 4% breakdown, right? And in 2 days, the stock is down 13%. Here there's a dollar breakdown and the stock goes down 16%. Again, in terms of where this move starts, this move can start from anywhere. Most of the good moves start from anywhere. They can start from a very strong stock. They can start from a very weak stock. So similar to what we saw on momentum burst on the long side. The stock had a dollar breakdown of 6.70 per $6.70 in terms of percentage, $1.75%, 1.75% in 4 days. The stock is down 6.62 in dollar terms, $24. Okay. Same way here, like if you see, there's a dollar breakdown. After that, it is down $24. Dollar breakdown from there in 3 to 5 days, $30 breakdown. Here, dollar breakdown in just 2 days, $16. If you look at fate, here 4% breakdown in 3 days, 4 days, stock is down 8-9%. Again, dollar breakdown and stock is down for 10%. Dollar breakdown, stock is down for 7%. Dollar breakdown in 2 days, stock is down for 9%. So, same thing which we discussed on the bullish side, that at the start of a bearish breakdown, there is a range expansion. So if there is a range expansion bar to the bearish side, that is likely to lead to a follow through. So range expansion is just a bar which is bigger than the last couple of bars. And if you see all of these are all like another stock after a bearish, this thing was down $17. Recently, after this bearish bar, it is down 3.60. So similar thing like what we saw on the bullish side, you will see when stock has a dollar breakdown, stock moves in that direction, $18 to $19. Dollar breakdown, next day stock goes down $10. Dollar breakdown, stock goes down $7, and so on and so forth. So the scan which I use to find setups like this is the bearish combo. The bearish combo scan, again, if you look at the bearish combo scan, there might be slight differences in terms of liquidity conditions and things like that. But if you look at the bearish combo scan and try and understand the bearish combo scan, again, as the name indicates, it's a combination of two ideas, which is a 4% breakdown and a dollar breakdown. So let's have a look at the combination bearish scan. When you look at the combination bearish scan, this part of the move, okay, is dollar breakdown. Now the only difference is instead of using 100,000, I'm using 300,000 here, because whenever I'm looking at short side, I don't want to get short something which is very illiquid, or 100,000 liquidity to me is more illiquid for shorts. So I look at a higher threshold for shorting, because that way you can have a lower slippage. You can most of the time get also stocks to short, which is a complication specific to shorting, where which is not a problem on the long side. You can always find shares to buy, but on the short side, many times share may not be available. Higher liquidity helps in that case. But this is my personal account size preference. If you have a different account size, you can always use 100,000. So this particular part of the scan, if you look at it, right, this particular part of the scan is no different. And this particular part of the scan is basically dollar breakdown, which is similar concept to what we saw on the dollar breakout side. And this part of the equation is basically again 4% breakdown. So let's make this color say okay. So that part is 4% breakdown. And again, the condition might be slightly different, but here what I am looking for, this particular filter, if you try and understand that particular filter, what this filter says is basically that today's dollar move is move to the downside is greater than yesterday's dollar move. So that way it essentially tells you that there was a range expansion to the downside. Now in this case of this is a 4% breakdown. The filter here is because you don't want to short a stock which is down 2 days in a row. So this is a filter, and this filter basically makes sure that the stock is not down more than 2%. Prior to breakdown. So again, you are trying to capture start of a breakdown. Okay? And then this is just a condition. This is again, like as I said, I need more liquidity on the bearish side. So this ensures that for last 3 days, stocks has traded 300K plus volume. Each of the last 3 days, it has traded 300K plus volume. Typically, can you make money shorting very low liquidity stock? The answer is yes, but the risk is higher. So in order to mitigate my risk, and in order to make sure that I also find the stocks to short, because many times I find a good setup to short and then the shorts are not available. So I try and look at higher liquidity plays on the bearish side as general thumb rule. So that's why this particular thing makes sure that there is a liquidity. So this is a liquidity filter basically. Now once I run the scan, if I find candidates, I am looking for a breakdown and at the start of a move. Now here I look for two kinds of situation on the bearish side, or two types of setups. One which I call strong structure short, which in simple language means a stock which is very strong and which is breaking down. So if you see Moderna was a very strong stock which had made a big move, and then it was breaking down here. So that was like in 2 days it made a $50 plus move after that. Okay, so that's a strong structure short. Or there are other stocks like I think Bentex, similar kind of a thing here, breaking down, and after that it has made 137% move. So strong structure short is similar to what others call parabolic short. So essentially it's a stock which was very strong, and then it has a big range expansion to the downside. And if you see, the stock was going up, this was a big range expansion to the downside, and then the stock went down. So strong structure short or parabolic short. The other thing which I look for is called weak structure short. So in weak structure short, what I am looking for is a stock which was down. The stock should be down 3 days in a row. Okay. And preferably in that 3 days, it should be down, like if it is in percentage term, at least 8 to 10%. 10% is preferable, right? If it is a dollar breakdown kind of a thing, you want it to be down at least $5 plus in 3 days. And after that, and this has to be 3 days in a row. Okay. After that, it has a bounce, weak bounce, and weak bounce is something which is less than 4% bounce of 1 to 3 days. The best setup is where it bounces only for 1 day. I would take something which bounces for 3 days and then it breaks down. And in a separate video, I'll talk about strong structure short and a weak structure short after this video, which will explain this better. So these are my two setups which I look for on the short side. Both these setups, again, I find it by running the combination scan. So all in all, every day I run bullish combo scan, I run the bearish combo scan, and I find setups. Okay. The only difference is because of lot of my capital is in retirement accounts like 401k accounts and other accounts where I cannot short. So relatively, the importance which I place on short is much lower. So I'm not really aggressively going and looking for shorts because most of the capital which I trade is in accounts which are not allowed to short. So that's the structural problem with shorting. As a result, I don't spend as much attention as I pay on the long side to shorts, especially in the accounts which are like, obviously you cannot do legally, you cannot do shorting on those stocks. So that is what it is. I will be talking about strong structure short in a brief video, which is parabolic short, and on a next video, in a brief video, I'll talk about weak structure short, which is a very easy setup to understand.